global programs is banking on change. And therefore I'm particularly proud to be here this evening and to welcome you all to this Microfinance Club presentation, which I know is going to focus on banking on change. Barclays have been really looking forward to hosting this, and I'm really here representing my colleague Chen Wong, who I know some of you will know. He's a very active member of the Microfinance Club. He loves coming to the sessions. He's learned a great deal from it, and I know that he really wanted to share what he's learned and his contribution to banking on change along with Plan and Care this evening. Unfortunately, he can't be here, but I hope I'll be a fair substitute for Chen. But it's on his behalf that I extend our welcome. He was talking to Sukhvinder back in July last year when we held a breakfast seminar here, and we talked about the possibility of Barclays hosting this event, and I hope that you really enjoy it. I'm not going to say any more. I hope I'll come back right at the end apart from my contribution to the panel, and hopefully we can catch up and talk a little bit more over drinks later on. But for now, I'm going to hand over to Sukhvinder in his capacity of chair of this event to run the evening for us. So you're very welcome. I really look forward to a great evening with you. Thank you very much.
You want to say that?
Okay.
Yeah, why don't you say that?
If anyone wants to tweet, use hashtag MSClub.
Thank you for the welcome, and thank you also for hosting us. I think it's going to be a very exciting afternoon, evening, and your presence and your coming in at the end of the day to come here and listen and participate is, I think, the best evidence of that. So, without any further ado, I would invite Monmouth from CARE, Senior Microfinance Advisor CARE International UK, to start this thing. I will also introduce Karen Moore, who is Economic Security Advisor at Plan International, and Paulette has already introduced herself. The core theme of today's session is how do we deal with people who have small change and aspirations like all of us to improve their lives, to send their children to school, to not be poor anymore, and grow along with their community and their economy. So what can be done by them and by others to make a big change that is meaningful for them and meaningful for the financial organizations and other organizations involved in the process. So over to Maud to start off the process, please.
Yeah. Thank you very much, Sukhvinder. Before we actually start the discussion, we wanted to show you a film that has been done back in August last year. It's a film that has been done with Alistair Stewart, and at that time he went to visit the Banking on Change program. And we have a nice film that is actually giving you a good picture of what Banking on Change is before we can actually discuss about it.
The Village Savings and Loan Group in Koweta, Uganda isn't even banking at its most basic, but it is the cornerstone to a radical programme, Banking on Change, that's transforming lives around the world. Run by CARE International UK and Plan, in partnership with Barclays, it's breaking down the barriers to financial inclusion, ignorance, gender, fear and cost. These people save, they borrow and lend amongst themselves, with the surplus going to the local branch of Barclays in Aganga. But so do the group members. They make their deposits and their withdrawals. They talk to Barclays people here like manager Andrew Okiro, winning their trust, winning them over to banking.
These people came to open an account. Now, seeing Barclays as beautiful as it looked, they had to put off their shoes to get into the bank. They're now more comfortable, they come into the bank. The rapport grew between the bank staff. Their confidence about visiting the bank grew, and I think that one really was a big one.
In the field, experts working with the charities guide them on business development plans. People like John Mapata from the local Farmers Collective. It's all helped Hassan, a married father of 2, move from working on his father's small holding to running, with his wife, his own mobile phone shop. He makes £170 a month profit, he's built a new home, and is putting himself through university. Business studies, of course. In another village, Sarah is another star of the scheme. She's the group treasurer. She still farms, but she's also bought a motorbike, which she rents out. She even employs the rider. Her next project is amazing. A cold drink service for the village.
Ndisuubira kukozesanga ku gundi generator oba solar kuba ndikwenda ndete solar.
Yes, she'll buy solar panels and a fridge to do it, all made possible by her hard work, imagination and banking on change.
This partnership will continue. We will provide them with the appropriate products, and that way we will retain them to make sure that both parties continue to benefit. But the real reason why we are doing it as Barclays is because it's part of our 6th agenda. We want to make sure that there is credit available at the village level to the small farmers, to the subsistence farmers. They are able to take their children to school. They are able to access credit when they are sick so that they can get treatment. And they are able to build a simple home when they need it.
Uganda has a very low average age in the teens, but a very high birth rate. But banking on change can not only transform the lives of the adults, but also all of these young children in just a few years. And that really is something to smile about.
Now it's our turn.
That probably give you a good idea of what banking on change is. So what we wanted to do tonight is really, we are actually, as Paulette said, we are actually very proud to be here to be able to share the achievement of what we've done. So we are going to try to give you a quick snapshot of what banking on change is. And it starts with the challenge of financial inclusion. Literally the difficulty of having 2.5 billion people financially excluded, not having the simple access to savings, to credit, to insurance. How are we going to tackle it? We have the Microfinance Club is looking at a range of different methodologies and approaches that are tackling this issue. But what does that mean? As Banking on Change, we have been looking at a particular approach that is based on care and clan experience. So without having any access to any of the services, this is a challenge. But when you have the minimum access that you can to savings, to small credits, then you can start improving your livelihood at a different level. So the background, how did we come together? It started back in 2009, where we had the very beginning of Banking on Change. It was about Barclays, Plan, and Care. You would say 3 different entities, really. What's the common ground for that? What can we actually build together? So if you look at this, there is actually some convergence in between, because each institution is bringing something that is contributing to the vision that we are sharing. That is to tackle the challenge of financial inclusion with care and plan, knowing how to reach out to those communities, and at the same time, Barclays bringing their skills in terms of financial knowledge and capacities. So we have a strong belief between the 3 NGOs that the partnership between the NGOs and the business have a role to play in development. More and more, it's not about NGOs on their side and business on their side. It's really something that we need to bring together. It's also about improving the quality of life, the people that we work with, so that we can facilitate the access to financial services. And not only the informal services, but also the formal one, as you have seen in the video. And then there is one particular thing that Banking on Change should be characterized with, is that this is a partnership that is based on savings-led approach. We believe that we should build on the savings of people first. So it's not about microcredit, but it's really about the micro saving. This is what we start with. So what is village savings and loan? And I'm apologizing for those of you who know that already, but I'm sure in the room there might be some people who do not know that much about it and who are keen to learn more about what it is. So Village Savings and Loan Association, VSLA, is a methodology that was developed by CARE back in 1991 in Niger initially. And it was built on something that is very simple. Indigenous traditional schemes where people actually do meeting, pulling their savings together, making loan out of this so that they can start their small businesses, mainly women. And so those women, what they are doing is that they are meeting, they are exchanging on social issues, but at the same time they are pulling their savings, and they decide between themselves how they can have a loan, pay the school fees for their children, buy a goat, have some resources for some petty trade that they want to do, agriculture, inputs, small little things that they were not able to do before. So the beauty of the VSLA methodology is that it's actually anchored in the communities, building on something that is already existing. So we are not distorting the local fabric, and this is key, this is part of the sustainability of it. So if you start with the cycle of savings collected, and then having the members contributing at their level. We also have a social fund where people can contribute for micro-insurance that they can access in case of emergencies, if they need it for their children, for a funeral, for anything that they can't cover off from any other kind of sources. Then this is also available. Then they decided self-manage, who will be taking a loan, how will that be accepted by the group, who will decide on this. CARE and Plan are not intervening at that level. We are providing the training for 1 year, and after 1 year the group is considered to be completely independent and autonomous. And then we pull out, and then this is the beauty, the group is continuing after having shared out the profit that they have generated on their loan. So they have a return on saving that is really high, around 30–40%, which is really something that the members are very interested in when they finish the cycle. So the VSLA methodology is great, but we also recognize the limitation. It's not that it is something that can't be addressed. So Banking on Change is also trying to look a bit deeper into that. The first thing is that because we believe in VSLA, we want to scale them up. So we had 3 objectives in phase 1. The first one was about the outreach. Okay, VSLA's work, we have around 3.3 million as CARE, Plan has around 1 million VSLA members in Sub-Saharan Africa. Around the world today, we have 7.1 million VSLA members. So, 2.5 billion, 7.5 million, the gap is huge. The challenge is enormous. So Banking on Change phase 1, 3 objectives. First one, let's scale that up. Let's scale that up. So with the support of Barclays, who have invested £10 million in the first 3 years, we have scaled up the VSLAs. That was the first thing. The second one was about, okay, let's have some impact with those people with whom we are working. Let's provide some additional trainings. Some trainings on financial education. Some training on business skills development so that they can actually better manage their income and better manage their saving. And that at the end of the day, we can see some impact at the level of health, education, income generating activities. And so we have seen that. You're going to see that a little bit after. And then the third one is really about the inclusion, the financial inclusion. How can we deepen the financial inclusion through some innovations? And one of the things that you have seen in the film about the linkages between the groups and Barclays is one of the particular examples that Banking on Change has succeeded. Really allowing the people to actually graduate, if you look at the ladder of financial inclusion, from the very bottom to a more formal financial inclusion. And you can see women now. You have seen in this movie, women who are now able to get an identity through having a banking account where they had never had any identity within their countries. And this is a step ahead. So if you start with the very basic VSLA, you can provide a very adapted product. And how we have done that with Barclays is that Plan, CARE, Barclays have had ongoing conversation, working meetings, so that we can actually design the best product available. And I can say that this is probably today the best product that we can have had hoped for the BSLA in terms of savings and in terms of credit. So it's really the understanding of coming back to the three partners, coming from different horizons, but at the same time designing a joint vision. Where are we heading to? How are we going to tackle the challenge of financial inclusion? How are we going to make sure that others understand what we are doing? And this is a perfect place to do something like this here, to share the experience of what we have done. So I think now you would like to know what has been the impact of this. So I'm going to hand over to Paulette so that you can see what it is like.
Maud, thank you. It's always a real thrill for me when I hear Maud talk about the methodology for banking on change, because its simplicity is almost its complexity. You listen to her and it sounds so simple, and yet that ladder is a really serious step. It's a journey towards financial inclusion. For someone whose background is with the not-for-profit sector and who came to Barclays, to know that we're part of making this a reality is a real privilege. And my job now is to tell you a little bit about some of the impact, because that's where you really start to see the results. I think it's really important to say that when we started this process, we put a very rigorous M&E structure in place. It's one of the things that Barclays was really attracted to working with Plan and Care, was their robustness and rigour in terms of evaluation and monitoring. There were 3 steps to that. One was a very clear, logical framework across all countries to a very common set of key performance indicators, so you could draw direct comparisons across countries. The second was a quantitative questionnaire, which really looked at the in-depth socio-economic impact on the communities. And the final one was linking with VSL associates, management information system, so that we could really look at the performance of the VSLAs themselves. Finally, at the end of 3 years, we had an independent evaluation. I'm not quite sure we sort of explained to you that we worked together for 3 years, from 2009 until the end of last year, and as Karen will talk about later on, we've just embarked on a further 3 years, so this isn't a sort of a one-hit wonder. What I'm giving you is a snapshot at the end of 3 years, which includes all of those forms of evaluation. So you have some of the data here in front of you, and I think it's really impressive. We start off reaching over 500,000 individuals who are members of 25,000 savings groups that we set up together. Now I think what's really important about this is we did set out some targets, some quite ambitious targets as we thought. I even remember the 3 of us getting together and talking about whether we could actually achieve those targets, which we're looking at around 380,000 people that we wanted to reach. We've exceeded those targets by 34%, working together for 3 years. So we're quite proud of that particular statistic. When you look at some of the data, $6.5 million has been saved amongst the groups, and average saving per person is $58 per member of group. If you try and think of that in terms of scaling that up, that's making a really significant impact on local and national economies. I think one of the other things that is impressive is that return on investment, and Maud has already mentioned that. When they pay out at the end of a cycle, the return on their investment is somewhere between 30 and 65%. So they know that at the end of a year, they're going to be able to get more from their savings than they have when they put in. And I think as a result of that, some of the other stats that are up there, or partly up there, is it means that this is a sustainable model. 91% of the people who join a group regularly attend a meeting. It isn't a one-hit wonder for them. And 97% of them carry on for a full year of the cycle. And at the end of that cycle, as Maud said, the majority of those groups carry on and sustain themselves because they've got their financial training, the resources within the group to make that sustainable. Things that are beginning to appear for us from year 1 is that these groups are self-seeding. People are looking at the success of the groups and they're wanting something similar and are setting up groups themselves and finding ways to do that. And finally, in terms of statistics, I think the whole concept of the impact on women is very important. In fact, 80% of the members of the groups are women, something that is really leading to women's empowerment within the communities. There are very specific achievements in each country, and I'll come to a couple of them in a minute, but some of those are at a large scale. So in Uganda, for example, the VSLA methodologies are now a recognised form of financial inclusion. It's what they recognise in Uganda as the way forward for financial inclusion. And we've been very keen to share some of our experience and our research. And our report that we brought out last year, or earlier this year, was finalised, which Karen's going to talk about later on. Breaking down barriers to financial inclusion was an attempt to try and share some of that learning. And I know that there were some organisations in this room who helped us to build that, because it was a very consultative process to bring that report together. So this is the sort of extent of where we delivered the programme. We set out in 11 countries in 2009. You can see all 11 of them there. We worked together for 3 years in those countries. In some of those countries, we've put exit strategies in place, and for the next 3 years, we're focusing in on 7 countries. Those are the ones that you'll see up there in red. So we have a significant focus on Africa, and then we're continuing our work in India as well. And the results that I'm talking about encompass all 11 countries. And here's some of the impact after 3 years. And some of it's very specific and country focused, but I think it's fairly indicative of what's been achieved. Some of these draw on information from the independent evaluation that was carried out by an organisation called Triodos Facet. In the box to the side, you'll see a statement which is directly lifted from their report, which talks about some of the emerging social impact that they saw. And what they've noticed is that there is progress over the 3 years, and our evidence, all the information that we've gathered through the models that I talked about right at the start, show that this evidence shows that there really is a significant impact as a result of engagement in the VSLAs that's contributed to these results. And Triodos wrote, "This is a remarkable achievement of the programme after such a short duration. Measurable impacts on spending patterns usually only begin to emerge after 3 years of a group's existence, and very few of those had existed for that long time when the end-line measurements were actually done." So we believe that we're sort of onto something here. We think that it's emerging, we can see the results coming out. We obviously can't attribute everything just to this programme, there are many external factors, but the independent assessment says that it's moving in the right direction. But you can see some of the other impacts as well. In terms of financial literacy, reaching over 500,000 people and giving them the skills to manage their own money and make sound financial decisions. It doesn't matter, they don't have a lot of money, it's the fact that they can manage that effectively. We work on a policy that we don't believe anyone is too poor to save, and I'm sure that's a principle that applies to everyone here. When you look at some of the impacts on women, we've made reference to Zambia and Uganda. You can see women in positions of leadership, women feeling valued and respected in the community, women being confident in solving problems. These are statistics that are emerging from our research. Look at the impact on income generating activities. In Egypt alone, there's been a significant establishment of small micro enterprises being set up as a result of people being members of savings groups. And in Peru, 50% invested in small businesses just as a result of this programme. And then you can see some of the investments in amendments to household situations. In Ghana, a 20% increase in investment in productive assets. And the figure in Uganda, that there was a 60% increase in household income, I think is quite an impressive figure. However, one of the things that we really wanted to share with you was the focus on the innovative approach to linkage that Maud's touched upon. If you remember her journey, the ladder that was up there, we're talking about the top of that ladder now. For Barclays Plan and Care, we've been asked recently what are we proud of. And one of the things that we're proud of is that we're the very first partnership that brings together a global commercial bank, with international NGOs to successfully link informal savings groups with the formal banking sector. Now, we've done this in 4 countries, in Ghana, Tanzania, Kenya and Uganda. And so far, 660 groups, I think, have been formally linked to branches of Barclays. This represents about 18,000 members of DSLAs. As Maud made reference to, the basis of that is developing appropriate products that meet the needs of those communities. Now, what we've done is Barclays, together with Plan and Care, have worked with the community to understand their needs, and we've developed a series of savings products, dependent on which country you're in, that actually meet the needs of those communities. In Uganda, we've taken that a step further because groups that were saving in the branch for some time wanted access to credit. And the best way to do that was to develop an overdraft facility for them. Because they have a culture of savings, because they have the financial skills to manage their money, we know that they're very comfortable about taking loans out against their own savings. And Maud made reference, I think, to high repayment rates. Repayment rates are around 95% within the village savings groups, and that continues with the branches as well. I think I just want to quote from someone who was a member of one of the groups that was linked. Marembe, who's a cereal farmer, wrote, "There's real benefit in being linked to a bank. It enables me to develop the capacity of my business. And if we get credit through the overdraft, it lets me invest in equipment like my new milling machine." And she really sees this as a step forward. Very interesting. I was in a meeting earlier on today, and there were 2 really powerful quotes that sat with me. I'm actually not quite sure whether these are the quotes that I should share with you, but they were very pertinent to me in Barclays. Some Barclays colleagues were out visiting a Banking on Change project recently, and a very senior person, having visited this project, watching the group in operation, said, "It was like watching a bank grow in front of my very eyes." And then the woman who was actually chairing the group said, "And because of this, one day my children will want to bank with the Blue Bird." And we've heard this before in a number of places. That's not why we do it. It's because, as you heard in the film, it's important to our commitment to citizenship, but actually we're starting to see that there's real sense in this process too. 2 other points that are up there. We've recognised that there are real issues in a number of places in terms of distance to branches. Not everyone is within easy reach of a branch of Barclays. So Barclays Plan and Care are actually working with other partners to try and address that. So we're working with telecom operators. In Uganda, we're working with Ramin to find mobile banking solutions that actually enable communities that are more remote to still benefit from the same sort of products. And the final point up there refers to a core set of principles. Now, the whole basis on which we've done linkage is on the basis of these principles. They pretty much speak for themselves, and these are a set of principles that have been developed by CARE. But what you can see is that they're group-driven, they're savings-led, they're based on groups that have been given and supported with financial skills. And that these aren't products, these aren't principles that undermine or hinder the group in getting involved with formal banking sector. We passionately believe that these principles could apply to any financial institution. We're really keen to see that this is replicated by other organisations. And that sort of brings me to my last point, really. What we've done is identify that there is a real positive impact on society, but also a positive impact on the business by developing the linkage products that we've developed. Communities actually save more when they know their savings are secure in a formal bank account. So the income invested in the bank increases with that. They operate at the same high levels of repayment rate, so any concerns about risk aren't there. A savings group that's banked with a branch of Barclays is a very good customer and operates at a higher repayment rate than most other customers. we are realistic. These new inclusive business models aren't going to be embedded overnight. They take time, and us developing our business case is taking time. But at the moment, we're seeing the embryonic seeds through these results that I've been able to show you, that there is something there that we can build on through this model. And I think this has really helped us to underpin what we want to do in phase 2. And I think with that, I'm going to hand over to Karen, who's going to talk you through where we're moving for the next phase of banking on change.
Thanks so much, Paulette. Thanks, Maud. So what next? Building on these huge successes that we've seen in the first phase of banking on change, Barclays Care and Plan are now starting a second 3-year phase. And as Paulette touched on, this phase is going to operate in 7 countries: Egypt, Ghana, Kenya, Uganda, Tanzania, Zambia, as well as India. We're going to continue our focus on extending financial inclusion to low-income populations, both through the informal savings group mechanism that Maud described, as well as through the formal sector linkages that Paulette has talked about. But we're also taking up 2 new challenges, and they are big challenges: working with youth, as well as fostering entrepreneurship to an even deeper extent. So the new focus on youth is based on the partnership's recognition that youth unemployment is one of the biggest economic and social challenges faced by the globe today, and it's one where we have the opportunity to make a difference. Youth make up a large and growing population, proportion of the population, particularly in developing countries, and yet, compared to the average, their unemployment rates are up to 3 times as high. They're more likely to be in underemployment and to be in working poverty, and they're much less likely to have access to formal financial services as well as informal financial services. Plan's experience with youth savings groups in West Africa has suggested that the low-risk form of microfinance in savings groups is a great way to enhance the financial inclusion among low-income youth. Savings groups also offer the opportunity to provide the financial education and business skills training that young people need to start to make the transition to their working lives. And business skills training is one of the aspects that's consistently requested by savings group members. They see a need to convert their growing capital into viable, sustainable income-generating activities and small businesses. So we're building on CARE's extensive experience providing entrepreneurship training to support the majority of our savings group members in this way. So what exactly are we doing in phase 2? Our overarching objective is to empower young people to be financially included and independent, able to create and reap the benefits of economic opportunities, and contribute to stable growing economies. It's a very aspirational objective, I think you'll agree, but we feel that the 3 key ways that we're going to feed into this are going to make a difference in the 7 countries that in which we're working. So first of all, we're going to reach out to young people, not only with savings groups, but also with this expanded and more in-depth range of financial education, entrepreneurship skills training, and employability training that's going to help them start an income-generating activity or enter the world of employment safely. Our outreach target is 330,000 people, of whom 75% are going to be under the age of 35, but we're going to have a strong focus on the core youth population of 15 to 24-year-olds. We're also going to support entrepreneurship among savings group members as a whole, where access to capital through the savings group mechanisms, as well as linkage to formal finance, plus the entrepreneurship skills training and sometimes advanced business skills training, are really going to help foster the establishment of around 41,000 income-generating activities and small businesses that are going to be sustainable, we hope, over the course of the program. And we're going to deepen our formal financial inclusion work by linking about 5,000 savings groups to formal financial institutions, including Barclays, and through our advocacy work as well. Now, Paulette mentioned a report that we produced in the first phase, Breaking the Barriers to Financial Inclusion. And the foundations of our advocacy work in phase 2 are really grounded in some of the recommendations that we made in this report as well. So this is where we'd like to end this presentation and to start off a discussion with you. The first recommendation is that we're really hoping and asking that the UN Development Framework, looking to the post-2015 world, is going to engage with financial inclusion as a key way of measuring progress towards more equitable and inclusive economic growth. Equality is going to be a huge focus of the post-MDG framework, as is jobs and economic growth, and we're really advocating that financial inclusion is going to be part of this process. Second, we're asking formal financial institutions and regulators to formally recognize community savings groups and provide them suitable projects, such as the ones that Paulette was talking about, like group accounts for savings and overdrafts. And this will be really a springboard to financial inclusion in many different countries. Third, we want to build bridges between the informal and formal financial sectors more broadly and really encourage formal banks to invest in low-income clients and engage them meaningfully to really reduce this number of unbanked people. Fourth, we really argue that investing in financial literacy is crucial to this process. We think governments should really be including financial literacy as part of national curriculums, not only in the developing world, here in the developed world as well, and also including accessible financial information for recipients of any social assistance like pensions or cash payments, to really make sure that people are understanding the kind of financial relationships and responsibilities that they're engaging with. Fifth, we argue that developing strong checks and balances to protect poor people, vulnerable people, is everybody's responsibility. Donors, governments, banks, everyone involved should be designing and enforcing consumer protection policies that really protect poor people and their money. And finally, building more public-private partnerships to expand access to formal financial services underpins all of these asks. Banking on Change has demonstrated and continues to demonstrate that such a partnership is possible, and we hope that other organizations really learn from this, and where private sector, civil society, and government are willing to work together to take up the challenge to confront financial exclusion and to build up the capacity of low-income people to foster their own path out of poverty. Thanks very much, and we'll turn over to questions now.